Okay, um, welcome to tonight's session, guys. And it's on my screen. You can see that this was where we stopped yesterday in our last session, and we'll be picking up from there. Um, Before we proceed, let me tell you something. Okay, you see, when you are learning a new thing like this one, like MBM, um, it's very important that you understand the thought process behind creation of that thing. That way, you are in sync with how that system operates. And since you are in sync with how the system operates, you have an upper hand. In fact, you easily understand the context that it is presenting to you at every point in time. Okay. The market business model does not focus on patterns or patterns recognition or um, other things that other traders use like patterns, guesswork, all those things. No, the strength of the market business model is in context, is in the market dynamic. Okay, so the market business model strength is not oh, it has gone up, so it's supposed to come down, or it has come down, it's supposed to go up. No, or because it's consolidating, you cannot do this, you cannot do that. There are no rules that binds you when you are trading MBM. It is fluid. The only rules that binds are the factual rules, like the ones that I've been giving you so far. Factual rules like the rules of candlesticks, the liquidity, and how the market operates. Those ones are facts. But when it comes to you engaging the market, it becomes a personal endeavor. When I say personal, I'm not talking about doing what works for you. No. I'm saying, for example, at the end of the day, you might be comfortable in using one approach, because the market business model does not just teach you a singular approach. By the time you're done, you craft out something that works for you. But at the end of the day, you will find comfort in using one, while another person will find comfort in using another. I hope you get based on how, but that does not mean that you don't understand. It's just that you find one which is more suitable for you. Okay. So when we get to that bridge, we'll definitely cross it where I'll be revealing strategies and all those things. But for now, we are still learning. And as learners, it's very important that we understand. It's like you are a soldier, you're going to the battlefield. You need to be well guarded. You need your armor, you need your spear, you need your sword, you need your helmet, and all those things to protect yourself and also to defend yourself and also attack. Hope you get what I'm saying. So right now we are still going into our arsenal. Okay. And the next thing we are going to be talking about exclusively. Now we have spoke about candles. Okay. Now we are going into um you see the way I taught you candles are the fundamental reasons behind the creation of a candlestick. Now we'll still talk more about candles, definitely, because it just doesn't stop at that. But at this point that we are, based on the way that I have arranged your what's it called now, your curriculum in this teaching, we need to stop at where we are in exposition about candle and pick up something called volume and price. We'll start with price, then we'll go to volume. Okay, then we'll go to how can we identify all these things in front of the screen. I've explained them to you based on the way it works in the market. Now let's come to the screen and let me show them to you. Hope you get what I'm saying. Now let's break it down to the barest minimum. Let's scatter everything. Okay, I'm just gonna remove this thing so that it doesn't confuse me. Doesn't confuse you. So good. Now let's bring everything down to a body of knowledge. Okay, let's break it down. You see, everything we do as traders evolve around one thing, and that thing is price. Hmm? So it is price. It is not trend. It is not candles. It is not patterns. It is not any other thing. It is not support or resistance. It is price. Okay, and you see, this is why the idea of so many ideas gets flawed. Ideas like overbought and oversold. You see, when price gets to an overbought region and it keeps on buying because price is not ready to reverse, or the idea of time, what's it called now, sessions. You hear when they will tell you that, oh, there is much volume, there is supposed to be much volume in London or New York session, and Asian is supposed to be consolidating. But then you wake up on a particular day and you see Asian moving in massively, London is not moving and New York is not moving. The biggest move we had that day was in Asian session because of price. Now, I will explain why all those things happen when we go deeper. Okay, but let's start from the scratch. Let's build up our understanding. Let's not rush. Okay, let's start small, small. Now, you see this thing price. It it was created by transactions. Yeah. So now we are not we cannot see transaction. Hmm? We can't see transaction. We can't see them. We don't know the people who are bargaining or who are dealing. Now, transaction is the combination of bidders and askers. When a bid price merged with an ask price and it creates a transaction, that transaction creates price. Now, we can't see those transactions. We can't see bid offers and ask offers. We can't see them. But there is one thing we can see, the end result of the bidders and the askers. And that is what we see as price. So every time you see this thing on the right side of my screen here, anytime you come from here, from this 0.632500 to 64100 here, these are price points, dealing points. So anytime you come to your screen and you see all these things, this is what we trade. As MBM traders, this is what we trade. We don't trade patterns. Whatever I'm going to be showing you, those things are just for helping us reference price or creating interest in price, helping us understand what price wants to do. But at the end of the day, we are trading at a certain price to a certain price. Okay? For example, if what I'm trying to explain is that, typically they will tell you this is support region, right? And this is resistance region. So based on what you were taught about support and resistance, this region is supposed to be a reversal region, and this region is supposed to be reversal. But you see, in the market business model, we don't trade because price have come to a support region. No, we trade because price is ready to move in a certain direction. So price might get to this support and move and give us hints that it's ready to reverse. Then we can trade reverse. It might not get to this support and then maybe just here give us hints that it wants to reverse, and then we trade that reversal. Or it goes below this region and give us hints that it wants to reverse, and it reverse. Sometimes it might not even reverse. It might just get to a little region and give us hints that it wants to continue, and then we trade that continuation. The point I'm trying to put to you guys is that we don't trade. If I'm telling you, oh, we don't trade candles. Oh, this is a bullish candle, therefore the next candle should be bullish. It's a lie. Oh, price is at a support or a resistance zone, therefore price is supposed to. No, that's not why price play out. There are other reasons, factors, and those are the things I'm going to be showing to you. Now, for you to better understand price, you would need to, because you see, everything we do as traders radiates around candlestick. So candlestick is our most important tool, because that is what gives, it is like a messenger that delivers price to you. You get what I'm saying now? It is the way we have organized price. You see, price in itself is scattered. I mean, look at all this from this zero, from this point up to this point. We have, if I remove all these things now, let's imagine all these things are not here. Let me just say, let's imagine that all this stuff are not here. You see this blank region here, this is the only thing that we have. Can you trade? No, you cannot trade. It doesn't mean, I mean, the only thing you can see is price, but you don't have information that helps you know what price wants to do. But the moment a single candlestick is printed on the screen like this, a single candlestick is printed on the screen like this, what happened? It gives you information. Now you can say, okay, this is opening price, this is closing price, this is the low, this is the high price. Now, what does that tell you? It tells you that the next candlestick would either be bullish or bearish. It's either it goes to a certain price point or to another certain price point. And now you will start working on how you can be able to trade in accordance, so that if it's going up, you follow it. If it's coming down, you follow it. But imagine if I remove this, there's no information. So that is why, as MBM traders, don't worry. By the time we get to teaching and trading very well, you'll notice that we don't, as MBM traders, you don't even need all those lines and drawings, because every area is our point of interest. But let's just proceed anyway. So the point is, we'll still need to talk about candlestick. There is nothing you want to deal with in price that you have to exclude the candlestick, because that is what we have as infographic. That is what gives us information about price. I hope you guys get what I'm saying now. Exactly. Now, that is what organized price for us. Now, talking about organizing price, this is where we now have to talk about the the aspect of price, which would equals to volume. And let's pay attention. You see, when a candle opens, let's imagine it open here, it is opening at a certain price. Please pay attention. Very important. It's opening at a what? At a certain price. Now, based on the rule of candlestick that I told you, a candlestick will never close, or else it has created a low and a high, or it creates one of them. Some candles will not create both of them. Some will just create one of them. Hope you get what I'm saying. But it's very rare for that to happen. Very rare. And if it happens, it's no problem. We are traders. We know how to deal with them. Anyways, when the candle open, and let's imagine it starts going up, and it gets to this point here. And it gets to this point here. It is not closed yet, though, but I just want to, let's just imagine that it is currently at this point. Now, when it goes to this, let's say this point here, sorry, let's use this point. And when it got to this point, let's put something to demarcate that point that it got to. Let's put something to annotate it. Yeah, good. Now, when it got to this point, it started dropping. Okay, you see, from this high, where this point where it got to, this point where it got to, yeah, to where it is now, a wick will be created there. And if you keep on dropping like that, wicks would keep on creating there. Why is that? Why is that? And this is due to what we called what's it called? Liquidity pairing. Please pay attention. I'm going somewhere. Liquidity pairing. Now, how is liquidity paired? You see, in this market, as I've taught you, there are those who are bidding and those who are asking. Now, let me separate them. Let me do it this way. Now, there are two types of orders that comes into this market: limit order or market order. Now, this I'm showing you something. Let me just show you. Now, how do I explain this so that you don't get confused? Okay. Those who are bidding would always bid at lower price. Okay. So they will always look for lower price because they want to, definitely they want to buy at cheap price. And those who are asking would always ask for what? High price. And why? Because they are, so this side is for bid, this side is for ask. And the reason why is because they are looking for high price. I mean, they're asking. Now, you see, if you are going to bid, you can bid in two ways. Either by placing an order, which means that you are placing an order at a lower price. So let's imagine price is currently here. But you are not okay with this price. You feel like price will still come down so that you can buy there. So when you are bidding, you are hoping to bid at where? At a lower price, right? Good. So what do? You place a limit order. Price is not there. This is where price is, but you because of this is where price is, but this is where you put your limit order. Now, what you have done is that you have provided liquidity in this market, and your order is known as pending order or inactive order. Limit orders are called inactive or pending order. This is the price point where you want to buy. So there's a liquidity there. You have put liquidity there. You have created price there. Because you want to do what? You want to buy low. Somebody who wants to sell, let's imagine there is someone who wants to sell. The person will definitely, let's imagine price is currently here. And someone who wants to sell will definitely look for the highest price so that they can make profit, right? So let's imagine that they put their offer here and their ask offer here. So the asker is asking at premium price, high price. The what's it called now? The bidder is bidding at a lower price. Now, if this continues like this, I mean, that means markets will never be paired. But this is why this market is so sweet. You see, the price that is expensive to you is cheap to another person. And the price that is cheap to you is expensive to another person. That is why that's why you see in a sell scenario, price will keep on going down, 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 down. That does not mean that the people who there are people who have not placed limit order here, hoping that they can sell at this point. It's just that you see those things that is making price to move are those people who are okay with the current price and they feel like, okay, it's okay for them. The same thing for a bullish move. That does not mean there are people who have not placed order at cheaper price, but it's just that when you see price going up, it means that price point, yeah, where their orders are being filled is the point where that price is cheap enough for them. So because of it is below price does not mean it is cheap. At the current price, it might still be cheap. Also note that since market bidding offers and asking offer gets paid, when someone asks at this price, there must be someone who is willing to bid at that price and they get matched, right? And once they get matched, price moved. The same thing happened here. When somebody bids, yeah, another person asks, gets matched. Now, this is where we limit orders and aggressive order now makes sense. You see, current price, where price is right now, are people who say, oh, I am okay with this price. I want to trade. I want to sell or I want to buy. I want to sell or I want to buy. Now, what do they do? If they are willing to transact at the market price, aggressive order, they are aggressive. It means they are aggressive. They want to trade right now. If they are willing to trade at this point right now, yeah, it means that there must be an opposing order, a bid order that have come into this market, that is in this market as a limit order. So when this aggressive order, this person, these people, or this order that is willing to execute currently, pair with this order that has already been in this market, it becomes a transaction, and that is what creates price. Okay, now let's look at a high. How is a high created? And this, yesterday I told us I will help us know how bids, how do we know when bidders are in control and when askers are in control. Now, for every high of a candle, it means that at a point price was bidding, of course, aggressively. Aggressively now means that market price, the buyers or the bidders were executing at market price, and the askers at the price that the askers have set as limit order. So you see an asker who have put his some will say, okay, I'm willing to ask at this price. Sorry, let me delete this. Other people will say they are willing to ask at this price. Others will ask at this price. Some others will be at this price. The point is that whatever price it is, the bidders are willing to execute, and price keeps on going up, 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 up. And that's why in this example I used for you, the candlestick open, the bidders are aggressively, the askers have created the liquidity. So the bidders are just pairing that liquidity. Okay. How aggressively they are entering at that price, price keeps on going up, 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 up. When price gets to a certain region, something happens. It starts dropping. Now, why did it drop? It means that now the aggressive sellers have reduced. And how do they reduce? Sometimes it's due to extortion, sometimes exhaustion, sometimes it's due to what's it called now, other factors, which I'll be teaching you guys. Okay, sometimes it's due to inversions, sometimes it's due to what's it called now, hawks. There are a lot of things I'm going to show you guys. Okay, I will show you how to identify these things in front of the screen, don't worry, but I need to explain them to you so that by the time we get to that stage where I need to show you, I will not come back to start explaining again. So please pay attention. These are the things I have shown to you. I've explained when I was explaining market dynamics and market fundamental. Right now, I'm showing it to you technically. As MBM traders, we don't trade candle or these things. What we trade is fundamental. The fundamental behind price is what we care about, nothing else. So when you see, so that's so the reason why you see this candle going up, 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 and it got to this point is because of the aggressive bidders were pairing with the liquidity that have been provided by the askers. Then it got to this point, then of the for whatsoever reason, which will be exposed later on, the askers started gaining control and they started selling aggressively at the offer of the bidders. So if the bidders are willing, are offering at this price, or bidders will definitely be at lower price now because they are bidding at lower price. The askers are willing to confirm these orders. Aggressively they are taking in these orders, taking in whatever price aggressively. So at any point in time, liquidity could be provided by the askers and the bidders will be the aggressive, and at any point in time, liquidity could be provided by the bidders and these ones will become the aggressive. Just know that for every bullish move, what it is saying is that the bidders are aggressive. Those who are bidding are aggressive. They are willing to, yes, give us any price you want. We are willing to buy at that price. If you like, call it 1 billion. Yes, that price is cheap enough for us to trade. I hope you get what I'm saying. Good. Now, of course, when we get to trading, we don't want to buy at market price. Of course, I will teach you guys how to know when price, all those things. Okay, so we'll talk about retracement and all those things. We'll talk about them. For now, just understand this first. Now, when price gets to this point and the askers start becoming the aggressive one, the askers, those who are asking, they become the aggressive one. That is when your wicks start getting created. Why? Because at this point, the liquidity of the liquidity of the that have been provided by the bidders is being paid by the askers. Okay. Now here is a twist. Let me show you it. Okay, and this is why this high is created. So every high means sellers were in control. Now, if we flip it to a low, when a low is created, it is the opposite of what I just told you. At first, who were in control? The sellers and the askers. They were engaging massively, aggressively as the offer that the bidders were giving them. And then all of a sudden, the bidders got in control and then they moved up. This is constant. For every low, either bullish or bearish candlestick, this will remain the same. For every low, every high rather, either bullish or bearish candlestick, this will remain constant. Hope you guys get what I'm saying now. Now that we know what happens at highs and lows, now here is a twist. Market is so interesting. If only you are willing to listen and pay attention to what I'm showing you. Trust me, by the time we are done with this class, there's a way your eyes will be so open, you won't even need anybody to. You will first exit all those Telegram group you are in, following signals or whatever. Just follow up. Market is interesting. This is, please pay attention, because if you don't pay attention to what I'm about to say next, it might blow your head off. Now, do you know that the reason why we are able to know who was actually in control was because of we use a candlestick. Now, this candlestick might be a 1 hour time frame candlestick. Yeah? And this is what happened on that 1 hour. Based on the information on this 1 hour, this was the highest point, this was the lowest point. Lowest dealing price, highest dealing price. If we go to, let's say, 2 hours, that means we have to combine two 1 hour candle or just two 1 hour candle. We might have a different candle with, another high, with its own different high or low. I hope you guys get what I'm saying. Exactly. This is why when I was talking the other time, I said candlestick is what helps us to organize price. It means on the 2 hours, it's different. It's different. It's different. The only thing that will make this 2 hour to look similar like this high is if we are now combining two 1 hour candle. Let's combine two 1 hour candle. So this is 1 hour candle. Let's use another 1 hour candle. Let's imagine that the next 1 hour candle, this one opened here and closed here, right? So this one have to open there, and then the next 1 hour. Hold on, guys. Let me shift this thing. A sec. Good. So the next 1 hour was able to create its own level here. Its own, was able to create its own. Let's imagine this candle does not have a wick. Okay, let me just use that complex one for us. Let's imagine this candle does not have a wick. It only has a wick low. Now let's add both of them together. Remember, both of them are bullish, so we are adding. Good. So what we will probably have is this high here. to this low here. I'm sorry, this close here to this open. I mean, price opened here and closed high now. So open and close. And then we'll have only 1 week. Now, if we want to interpret this candle separately, we'll say on these candles, I mean, at this high point, askers were aggressive, bidders were aggressive. And then at this next candle, bidders were aggressive and there was really nothing for the askers until the next candle. Yes, because we are explaining it differently. But what if we added both of them together? The only thing we know is that askers, I'm sorry, bidders were the one that was in control because of the low. This is a 2-hour candle. We combine these two candles to give us this 2-hour candle. So now you see that it is relative. Somebody will be okay with 4 hour, and what 4 hour is given to him is different from what someone who is comfortable with 15 minutes is having. This is why yesterday when I was explaining that on the daily time frame, if you go to 1 hour time frame, on the daily time frame that closed bullish, if you go to less than 1 hour time frame, you might be seeing bearish move. That's the information as per time frame. So when we are trading, please, it's very important, dear MBM trader, candlestick. We don't joke with it. It gives us the information, it gives us the time frame, everything we need. Anyways, this is just me explaining what happens at highs and lows for us. Okay, how to identify bid and ask. Now that we know how to identify who's in control, we know that every high point is the askers, and every low point is the off. This guy, the bidders. Now, let me delete this so that we can proceed with our lecture. Now, how does this knowledge help you? How does it affect you? What do you need it for? You need it because of to identify price. See, when this candle opens here, create a low. Now, please pay attention. I'm teaching you something. And this is, you see, knowledge is very important. Very important. Good. When this candle opened here and it started going down, now let's imagine that now, not when I use the word know now, I'm talking about you have analyzed and you know that price is bullish. And then you know that the next candle, this candle is going to close bullish. And then it now opened. When it opened, it started selling instead of just going up. What does that tell you? It tells you that the askers, okay, they are creating liquidity for the bidders to come and clear so that we can continue to go up. I hope you guys you see what I'm teaching you here, right? Good. So the moment those who are asking are dropping, they're aggressively, you know, asking and all, there are also liquidity above there. Okay, and then what happened? You look for your entry here and you trade up. And you trade up. And then when price now gets to that point of exhaustion or that point of reversal, where of course I'll teach us to know how, when these things are exhausted and they can start reversing. So when price gets to a point of reversal, what happens? You can take your profit. But then you know that now bidders have created liquidity for askers to take, and then you can sell there to the close. You see how we have used the candlestick to identify price point, price delivery rather. This is how it affects you as trader. The body, the open and the close of a candle have their own work. I'm just teaching you the work of the high and the low. Candlestick open, start selling. Meanwhile, we know that this candle will close bullish. Oh, you now start selling, 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 selling. It's simply telling you that okay, the 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 the, the askers are okay. They are selling aggressively. They are confirming the orders aggressively. They are pairing aggressively, leaving liquidity above. And then once you get to that price, the bidders kicks in and they match up the trade up until this point, until when the askers come into control again and they start selling. That's what happens in a candlestick. I'm explaining see, traders, we don't trade candlestick, we trade fundamentals. This is why candlesticks, you see a wick is very tiny. Some will be very long. Some will not even have at all. And then you see people who don't even know what is happening, calling it funny names. You see a candlestick that covers the other candlestick, the previous candlestick. Let's say this candlestick now covers this previous candlestick. You are calling it engulfing. What is it engulfing? It's not engulfing anything. This thing I just explained to you is fractal. It does not just happen in a single candlestick. It can happen in multiple candlesticks. Let me explain. Let me delete this, or let me just move it here. So this particular, sorry, let me delete this. Yeah, yeah, good. Now this particular candlestick is bullish, and then this next one, let's imagine it's closed bearish. This one closed bullish, this one is bearish. Okay, so let's give it its own wick like this. Okay, it doesn't even matter. The wicks can be can be like, I don't know, let's just give it, let's say, this kind of wick. But this is the bearish candle. How do I know it is bearish? This is the open, this is the close. And the opening of this candle will be the close of previous candle. Did I put any color? No. But did I know the candlestick? Yes. So let's explain what happened here. Still on one hour time frame, or one day time frame, or whatever time frame, it doesn't matter. The point is we are combining two time frame. Now let's combine them. The first thing we know is that this first candlestick opened here and it closed here. Okay, and this next candlestick opened at this previous candlestick, what's it called now, close, and it stopped here. Now we have to minus. Remember, both of them are negative candles, so we must minus them. So if we overlay them each other, what we will see is that this high here, this level here. Now, if we add both candlesticks together, let me overlay them. Let me put them on each other. You will see that. Let me put them on each other. What's happening? This particular candle, this second candlestick, has a portion that this previous candlestick have not covered. Okay, so that portion comes close. What's it called now? Where price would show us as body. Why would price show us this level as body? I will explain. Now, this candle was bullish. The normal explanation I gave to you happened and price started going up, closed here. It went up to this high, delivered, and then closed here. This next one now opened. Now, all the bullish offer now remember that the only offers that we knew that were completed was the one in both the high and the low, right? Why? Because we know that they've been paired, right? And the only thing that they can have right now is maybe they have liquidity at high point or at low point. I hope you get. But the body, might include levels that are not paired. Hope you get. It might include liquidities that are not paired. So the moment this one opens, it pairs those liquidity. So what we are seeing here now is from this open, let's imagine that all the liquidity inside this open have not been paired in this previous candle, but price went up here. Then when this one opened, it starts, pairing those liquidity up. Okay, askers start completing those liquidity, and since there is nothing below here again, there is nothing to pair. There's nothing below here to pair again. So what happened? It stops here. On all the pairing stops here. All the pairing stop here. Okay, and once all the pairing stop here, what happened? The next thing is for price to create a new what's it called now? A new body. Not a new open price and close price, so a new body. The law of opening price and close price still remain that this is the opening of this candle, this is the close of the next candle. That is the reason why we have here. But I'm explaining what is happening inside that candle and why we will not have, and that is explaining why we will not have a very long week like this in this candle. Why? Every single area here, even though this first candle here, this area, this portion that is now a wick was actually a body before. But I mean, the sellers, remember this is a sell candle, a bearish candle. The sellers have already completed the orders of the buyers. It matched up, price drop. So on the daily time frame, this is what you are seeing bullish and bearish. But on a 2 daily time frame, on a 2 daily candle, daily candle, you are seeing just this singular time frame, this singular candle here. Hope you get what I'm saying. Now, on a higher time frame, you cannot know what have happened on the lower time frame. But on the lower time frame, you can have an idea of what would have happened on the higher time frame. What I'm saying is that if you are on 1 hour, you can easily combine 2 candles and tell what will happen on 2 hours. Combine 5 candles, know what will happen on 5 hours. Combine 11-hour candle and know what will happen on 11 hours, or 24 hours to know what will happen in a day. But if you're on the daily time frame, you can't know what have happened inside this candle. This is why multiple time frame analysis is a thing. But the way we use multiple time frame analysis as MBM traders is not the way you have been taught. I will also teach us those ones. Everything I'm going to teach you. I'm basically literally just pointing out my knowledge for you guys to learn from. Okay, so just follow up. Now that I've explained this, let's now talk about how does that affect you as trader. It helps you know what's next. Yes, it helps you know what next. I mean, imagine I know that price, I know that this candle will be a sell candle. And then I now see it goes as high as this level, and then I now start seeing some patterns or some sign. Won't I sell? I will sell now. Why? Because I know bidders have created price, and then askers are the one that are now doing the job for me. Let them just deliver price. Let me take my money and I'm out of the market. Now, this is not, don't go and trade this thing. Though. There are other things I'll still show you. Because now that I've shown you this thing, let me ask you, do you know when it will reverse? No. So I'm going to show you. There are some things that I'm supposed to say, but I did not say it now. Maybe in the next class I will say them. But this is how price delivers. Because of aggressive orders carrying with liquidity that have been created, or passive orders as you will call them. I'm sorry. And pending orders, as you will call them, or pending order, or aggressive orders carrying with pending orders on the side. In our next class, I'll be teaching us, we'll be going deeper into price. We're not done with price. We have a lot of things to cover about price. Okay. Now, in our next class, I'll be showing you how exactly can we now know where price wants to go to. Because when a bullish price is created, or a bullish candle as you will call it, I don't call it bullish candle, I call it bullish price. Yeah. Once it's created, how do we know what the next candle would print for us? How do we know that? The information that this one will give us that we need to pay attention to. Yeah, I'll show you all those things. And then we'll now go deeper into explaining time frame, the why we, well, we can't create our own time frame because of some reasons. Yeah, and so we have to use the traditional method of time frame approach. We'll still go deeper into time frame and price, and then from there on, once we are done with that, we'll now dive into volume, because you see, as much as I've explained what happened here, I've not explained the volume aspect of it. It's when you understand this thing properly that you can know. See, you, somebody will say, you are talking too much. Is this one? Is this one? Bro, there are sometimes that price will come to a level, yeah, like this level now, and it will keep on going up, 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 up. Meanwhile, it has given you sign to sell. How do you know that you're not supposed to sell? You're supposed to be buying. Or when price comes to a level, you start selling a little bit and then reverse back. How do you know how to know all this? That's why I'm showing you all these ones. Not because I find joy in talking for a very long time. So please pay attention, okay? I'll see you in the next class. Good night, guys. God bless you all.